Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly Video for the 6th of December here in 2022. We're seeing the big picture play out, and in tonight's video, we're just setting the week ahead about any big events or chart levels and the like as we push to the end of our first full week in December. So let's get started right there. So in the S&P, big picture is we still continue a downtrend. That's the easiest way to define the bulk of 2022. So 2022 has been a downtrend in the equity market. It's been a bear market as well. That's a little more specific. That's 20% off the high. We are in a bear market. And the market is in the third time, the way I look at it, coming to the top of the falling trend line. That's the first time right here. That's the second time at the middle of August. And this is the third time we see the market on a bear market rally back to the top of a falling trendline channel. So as we're looking, think about this in prior videos, over here and over here with the same conversation and game set up, that we would see a risk reversal. What does that mean? The last time we saw the risk reversal was down at these lows at the bottom of the falling trendline channel. And the word risk reversal to me in this context just means, what is the risk of the market continuing lower when it's already came down that much? Down just means from 4,300 to 3,500, simple round numbers on the SPX. What are the odds of it going lower versus trading to the upside? And that, therefore, the reward is extraordinarily small compared to the risk of a reversal, which is what happened. So now we see the same. What is the reward of the market continuing to trade to the upside, just like these, versus the risk of it trading lower? Given that this pathway to the downside is much bigger, we have a risk reversal. Therefore, the risk is to the upside and the reward is off to the downside. Very similar. The same process on the big picture here, beginning December, will go through leading sectors. That includes starting with the financial sector. Where might it trade toward and from? Possibly, again, a reversal down away from, in this case, 36 per share on the ETF. Possibly down to 33, perhaps all the way down to a repeat of the prior events in 2022, at least in terms of what happened from 36 per share. That would give sell side activity and bear or put positions squarely in focus. The K is technology. We see that same logic of a downtrend taking the index. Might not happen in December, but looking toward January for the market going off to those new lows. And in a little bit of a surprise, the retail sector. Now the retail sector is XLY, or consumer discretionary sector, retail, big names, would be close to those lows. So it is almost there. And in my session today, I was explaining why that's the case. Anytime you wish to take a look at some of the stocks that comprise in a sector ETF, for example, XLY, just go to the Analyze tab and you can see which stocks and what percent or what weighting that are in that ETF. So the top two stocks in the XLY is Amazon and Tesla. So a quick look inside of the XLY shows that Amazon is on its own sell swing and bear type position to new 52-week lows. So the big arrow, as I like to define it, is down. And that stock is weak, getting weaker. Behind it, second largest stock in the XLY is Tesla. Tesla similarly is weak, getting weaker. And that arrow is also to the downside. Tesla itself is off potentially just a few more points or dollars away from 52-week lows. And while we're on the topic of new 52-week lows, a scan that shows which stocks gave new 52-week lows today, there's one major stock in the S&P 500, and that's Salesforce.com. Salesforce.com, that big arrow is again to the downside, and that stock has made new 52-week lows. That makes the sell side activity, or the bear positions, set up into pullbacks or retracements, in this case against 160, and that has completed the downside move on earnings, weaker earnings, and high sell side or bearish volume, similar to what was seen in August when it also tumbled to new lows and continued trading lower. But back on the sector analysis, on the XLI, that's industrials, that's seen a little bit of a lift. We'll call that similar over here to the XLF. A little bit similar, that lifted a little bit higher than its prior resistance. But it does have a bear potential trade or a sell side activity down away from this 101, 102 per share that could take it back to 94, just a midpoint. Think about this like a distribution or a bell curve. That's just the middle of that trading range. B is going to be materials, similarly to industrials, that has a little bit of a push higher and a potential to rotate and reverse back inside of its trading range. That takes it roughly from 83 to this case about 75. The only one, we'll skip energy, it has a much different play. P is your consumer staples. We'll extend this resistance point just shy of 78, and the bear position does take it down to midpoint support. That's about 74 for the XLP. V is different. V is your healthcare sector, and it is, roughly speaking, one of the only sectors that is back or near 52-week highs. So some of the leading stocks, we'll take a look at Cigna, and it is the only major company, Lamb Weston Holdings, by market cap, that is making new 52-week highs and has done so for the better part of 2022. It's a stock that is going the other way of the market and, of course, individual sectors. XLU is more sideways. I would pull this perspective when you're looking at trade setups to a little bit farther back, 2 years back, and see that its parallel trendline channel, we've had volatility for the bulk of 2022, but it does have a rising trendline pattern. So that is not a lot setting up at the moment for XLU, but the one that stands out is XLE, that's energy, and it is coming down from its prior resistance, that being just shy of 95 per share. And that has a potential trading range, but it is the only sector that began 2022 strong, and its arrow, again keeping it simple, has been higher and stronger, not without volatility and some good sell side moves. So those are the sectors as we're beginning December. Is there anything on the calendar in the week ahead? Not a lot. Last week was volatile. Last week had lots of news, lots of headline risk. But this week is a little more calm, and that is seen as well. We'll go back to the SPX expected move, which we saw get hit in the morning session. 22% implied volatility going through this week. So not a lot in the expected move logic. There's the Dow, there's the Nasdaq, and see its expected move takes it 20, 23, 25 with these expected moves in play just on the upcoming option expiration. The tech sector was hit again today. XLK taking the brunt of the sell side activity right there with energy, and that is pulling the Nasdaq to the weakest index in today's session, down about 2%. Again, leadership there, looking at our individual stocks that make up that sector: Apple, Amazon, Google, Microsoft, Nvidia, and those others in the SPX and in the Nasdaq, those take a much bigger role in influencing the Nasdaq. So Meta right here was the weakest stock in today's session, followed by Charter, Disney, Nvidia, Amazon, and a few others, including Qualcomm. Not all of them are tech stocks, but the bulk of them were, and that did pull down the Nasdaq. So these are things we're watching in this week. Of course, the bigger picture, markets don't go straight down or straight up, but they do tend to follow the big arrow, or at least the direction of the broader trend more than not. So always be careful, always be safe. In this week, headline news, stock-specific risk, and the only one we'll really pay attention closely to, two of them, in terms of S&P 100 stocks that have earnings, The first will be Costco. That will come up 2 days from now after the close there on Thursday. But also Broadcom will similarly report earnings after the close on Thursday. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for December 6th, 2022.